morning. Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, January the 9th. Markets were pretty much higher across the board here overnight in turnaround Tuesday type trade fashion. Large speculative traders were pretty healthy sellers nearly across the board yesterday, with the exception of soybean oil, where they were flat. Money managers remain net short the ag space, with the exception of meal, where they're still long about 40,000 contracts. And it does appear that it was fresh money coming into the markets on yesterday's weakness, as open interest did jump pretty much across the board, up 20,000 in corn, 10,000 in Chicago wheat, and just over 5,000 contracts in beans, a couple thousand in Kansas City wheat as well. Conditions in South America remain mostly favorable, with recent rains across northern and central growing regions of Brazil helping stabilize conditions there in recent weeks. There's the first of a few major storms starting to roll through the central parts of the U.S. Today, leaving a mix of heavy snow and rain. Over the next few days, bitter cold will start to drop down from Canada, and by the weekend, will bring 0-degree readings as far south as the Kansas and Oklahoma border. Daily lows of 15 to 25 degrees below zero will be common across many areas of the northern plains. Little crop damage, however, is expected, though, with much of the crop areas having received some snow cover in advance of this bitter cold. Estimates for Friday's USDA reports are starting to roll out. The first survey I've seen showed traders do expect slightly lower U.S. corn and soybean production, and I think that's pretty consistent with what we see historically. And that's in line with our thinking. Corn production estimates coming down about 20 million from the November estimate, in soybeans down nearly 10 million bushels. Ending stocks in corn expected to drop roughly 40 million to 2.1 billion bushels. For both wheat and soybean, ending stocks are likely to stay very close to the December estimates. D1 stocks in corn is expected to be nearly 1.2 billion higher than what they were a year ago. Wheat up 80 million bushels, beans down about 45 million bushels. We look for lower production coming out of Brazil due to heat and dryness over much of Q4 from last year. Corn likely to drop about 2 to 3 million metric tons, while soybeans more like in the 4 to 5 million metric ton lower production there. Perhaps a little bit of an upward tilt to the crops coming out of Argentina. Winter wheat acres here in the U.S. expected to fall about 1 to 1.5. However, we do have a pretty wide range of estimates from analysts here. Overnight energy prices have rebounded after yesterday's large pullback. The U.S. dollar is also slightly higher here this morning. We'll see if we can uncover any sort of export news on this recent price decline, particularly for corn, where we remain priced below that from South America. Maybe a little tough for soybeans, however, as Brazilian prices have been quick to undercut those of the U.S. So ethanol demand tomorrow, ethanol production tomorrow, export sales on Thursday, and of course the big USA reports here on Friday. Thank you for listening, everyone. I hope you have a great day.